Hey everybody, Tim Albrecht here, and welcome to this week's episode of the RX Money Roundup segment on the YFP podcast, where we give you our take on relevant financial news and updates, answer your questions, and break down examples of financial planning and action. Today, we're taking a question from Andrea about what to do once a 30-year term life insurance policy ends. Before we get to that question, let me give a shout out to the incredible work our team of fee-only certified financial planners is doing with our clients all across the country. We all know from firsthand experience that pharmacists make a good income, but that doesn't guarantee financial success. As I've said on this show many times before, a six-figure income, while a great tool, is not a financial plan. At Your Financial Pharmacist, we specialize in helping pharmacists get clear on what it means to live a rich life today while taking care of the future. So whether you're planning for retirement, building wealth, or navigating a mound of student loan debt, our team understands the unique financial challenges you face. With personalized, comprehensive financial plans, we help you make informed decisions at every stage of life. So if you're curious about what it would look like to work with one of our fee-only certified financial planners, head on over to yourfinancialpharmacist.com to book a free discovery call with Tim Baker so that you can learn more about our services, we can learn more about your situation, and together we can determine whether or not it's the right fit. Again, visit yourfinancialpharmacist.com to book a free discovery call and to take the first step towards a secure financial future. Okay, let's hear from Andrea in Olathe, Kansas.
Well, hi there. My name is Andrea, and I am from Olathe, Kansas, and I had a question about term life insurance. So my husband and I are starting to follow some of the Dave Ramsey methods, and we currently have a whole life insurance policies that we're paying into every month, and we're wanting to possibly switch and go to the term life insurance side. So once the term life insurance ends, we're currently looking at policies that last about 30 years. We're just curious about what do people tend to do at that time. Not to date myself, but 30 years would put my husband and I in our late 60s and probably at retirement age. So I was curious if you should get a new policy with maybe a slightly shorter term, or just curious about what most people do at that time.
Yeah, so Andrea, I'm really happy that you are evaluating other policies outside of the whole life policy. And obviously, we've talked about this at length on the podcast, that we're more fans of term life insurance versus whole life insurance for a variety of reasons. But so just a recap on that, whole life typically covers for you for your whole life. Term, on the other hand, will cover you for a specified term of your life. So whether that's 10 years, 20 years, 30 years, like you mentioned. And, really the reason that we like term versus the whole life is because of the cost. It's just, I talk about the rule of 30, a healthy 30-year-old can buy $500,000 of term, a 30-year term policy for $30 a month. In a whole life policy, typically that's going to cost you, 10 times that or even more. Mm-hmm. So the question more specifically about, you get to the end of the 30 years, what do you do? And I think the best answer that I could probably say, and this applies often to a lot of parts of your financial plan, especially investing, is you do nothing. Mm-hmm. Most people, if you're in your late 60s, typically the house is paid off, the kids are grown up and are self-sufficient. You have that nest egg, that couple $1 million that you've been basically socking away over the course of your career. So there's really not a need for a whole lot, a life insurance policy. And that's one of the things that I don't necessarily like about whole life, is that you're still paying those ridiculous premiums for whole life when you're in your 70s and 80s, and you don't really have a need for insurance unless there's, a legacy, hey, I really want to leave $500,000 to my alma mater, or there's a business need, or maybe there's just some type of family issue that you need that policy. But I would say for most people, there's not a need for life insurance once you got to go through those stages of life. And maybe the people to talk to, it could be your parents, if they're in their 60s, which is the age that you'll be in 30 years from now, maybe just pick their brains on that in terms of, what they do and what they're looking at. But by and large, it's one of those items is once you get through those 30 years, essentially, which is why a 30-year term is typically what a lot of our clients look at. You're pretty much set.
Yeah, and we think about Andrea's situation. She alluded to the fact that, if they were to buy a 30-year policy, that would put them late 60s or so. And just based on, how these term policies are priced and purchased, obviously you think of age, health factors, they're simply just doing a calculation to say what's the likelihood of death and a payout that they're going to have to make during that time period, right? So, the chances of getting a term insurance or re-upping a term insurance policy at that point in time, obviously you're looking at either it's just an extravagant cost or it just doesn't make sense because of the things you mentioned where you've got other parts of your financial planner in order such that the need of it goes away. I think, Tim, too, this is just a time to remind people. I know something that I feel like I fell into the trap of is, Jess and I bought our first term policy when my oldest Sam was born. But then, we went from one kid to four kids. And obviously you fast forward 6 years, your financial situation looks very different. And so we ended up repurchasing additional policies. So we started with a 20-year and then we added on, 30-year, 6 years later, essentially 2 policies that we have now in place. So I think this is not something that you do once and you're necessarily done, right? I mean, life situations can change.
Yeah, and it kind of goes back to, what do you do at the end of the 30 years? Well, maybe what you do is at the end of 10 years where you say, yeah, let's reassess life. And we say, okay, maybe we then buy another 30-year term, which then takes us out to, late 70s. Yep. If that's something that you need it. Yeah. So to your point that it's not something that you just kind of, dust your hands off and say, we're good here. And most, in a lot of cases that might be true, but then, if you're adding kids, if, income changes or, whatever that looks like, or if you say, hey, if something were to happen to me, I really want to send Johnny to, full ride, wherever that might be another addition to your life insurance policy. So you can definitely ladder policies and make sure that you have coverage. But, at the end of the day, by and large, a lot of pharmacists, especially if they're listening to the Your Financial Pharmacist podcast, are going to be savvy enough that they're going to have the student loans paid off, the nest egg there, the kids are self-sufficient, all those things will be in line.
Tim, one question for you from your experience. Andrea alluded to in her question about, she currently has whole life, and it sounds like there's an option where they would potentially cancel that policy. Obviously, we don't know for sure. From your experience working with clients, what you know, for others that are listening that maybe have a whole life policy and are looking at that in a similar situation, knowing all policies, of course, are not created equal, what is involved in that? I mean, in terms of both the cancellation cost, what you're giving up, and the process that you've seen that involves.
Yeah, so it's funny because I actually just talked to a client yesterday. 2 pharmacists have a pretty healthy whole life policy, each paying thousands of dollars a year, and they're looking at possibly discontinuing that whole life policy. The problem is that you typically want to look at what's called the in-force illustration to determine, okay, what are you potentially going to surrender in terms of like fees and charges if you walk away. So that's really the first place to look. But that's the thing. And this was another example of a pharmacy school bringing in a salesperson, that talked about finances and then peddled a product that ultimately I think is not a good fit for the student at the time, because it's just, by and large, whole life is not good for that particular demographic of people and just in general. So, to answer the question, I would say they'll basically look at the in-force illustration and then either talk to, if you can't make heads or tails of it, either talk to someone like us or someone that doesn't have basically an interest in selling you a product to determine, okay, if I walk away from this policy, what am I actually losing? What am I giving up? And sometimes it does make sense, even with the surrender policy, because you just get away from those premiums. And the cash value is not, and again, the words verbatim was like, yeah, well, we were told in a couple of decades that this would, basically, have a return. And to me, it's a ridiculous comment, but it's what a lot of pharmacists are told when they buy those policies.
As we wrap up this week's episode and discussion on life insurance, let me point you to a great free resource that we have available, which is the Life Insurance for Pharmacists, the Ultimate Guide. We'll link to that in the show notes. In this extensive resource, we cover why life insurance matters for pharmacists, the types of life insurance that are available, and how to choose the right policy for your personal situation. Again, we'll link to that resource in the show notes. Thanks again for listening to this week's segment of the podcast. If you have a topic that you would like for us to cover or a question that you would like us to answer on an upcoming episode, send us an email at info@yourfinancialpharmacist.com or you can send us a voice memo by visiting yourfinancialpharmacist.com/ask. An important reminder that the content in this podcast is provided for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. For more information on this, you can visit yourfinancialpharmacist.com/disclaimer. Thanks so much for listening. Have a great rest of your week.